Hi everyone, this is Brian Neal with TradeToBeFree.com, and today I want to talk about what a lot of technicians consider the most powerful chart pattern. It's called the high type flag, and we found this in our own trading. And I'm going to share with you my top strategy to turn a small account into a large account much more quickly using this very bullish technical pattern. And I'm going to show you how to do it whether you work full time or not. And it's one of the top chart patterns and top technical trading steps in the market, and every trader should really know this and find a very good strategy for trading this, because when they come up, they offer oftentimes the best opportunities in the market. Okay, so you're about to learn my optimized strategy to trade what many technicians consider the most powerful chart pattern. And one thing I've noticed this year in 2018 as I record this is that it's coming up more and more. So as the economy accelerates and as earnings growth strengthens and sales growth strengthens across the universe of stocks, this pattern comes up more and more. And a lot of traders are able to double their money within several months with no margin or options. And this strategy can actually do that during a bull market with no leverage, and will work for both small and large accounts, and even while using free brokers. And I'm going to show you the back testing that shows that in 2018. Again, it's been one of the top chart patterns for many years. So what you've learned so far about the high type flag pattern is not enough to make excessive returns. A lot of people understand or have seen this pattern before and read about it and so forth, and there's a lot of interesting information about how to play it, and there's actually an optimized way to trade it that I haven't seen written anywhere, and that actually outperforms those other methods in our back testing. In fact, some of the suggested ways of playing the high type flag actually didn't work out that well in the back testing, but the way contemporary traders that are successful trade this works out a lot better in the current market. I often refer to this as a bull flag pattern. You often hear people refer to it as that. Okay, but other traders will talk about bull flag patterns, and usually when the term is used, it just refers to a move up in a stock. Might be 10% move, might be a 5% move higher, might be a 20% move higher, then a consolidation sideways to lower consolidation, and then a break either of the downtrend in the flag portion of the pattern or a move above new highs. And so the generic term bull flag pattern is often used, but this is actually a very, very tall and large version of the bull flag pattern, and we refer to it as the high type flag. Okay, but you'll sometimes hear me refer to it as a bull flag pattern on the site as well. And really what it is a very extreme version of a flag pattern, and it's much more bullish. Okay, many experts discuss the pattern and very similar patterns in their writings. Okay, now if you're familiar with Investors Business Daily in their books and their strategy, they refer to this pattern or a very similar pattern to it called the short stroke. And they often have noticed in history that this short stroke pattern on top stocks often leads to the biggest gains on growth stocks in the months ahead out of a bullish confirmation signal. So a time where the market's first starting to break out and move strongly higher after a consolidation or after a bear market. Okay, so if you notice this short stroke pattern on a top growth stock, it's often one of the best performing growth stocks in the market for the months and years ahead. There's other technicians too out there that refer to the high type flag as a very bullish chart pattern. I'm going to show you an example of that before we get going here with the rest of the presentation and how to trade it and so forth. I'm going to show you an example of that appeared in our daily alert newsletter back in June of this year, and this is EGAN. Ticker is EGAN. It's actually EGAN, I believe, is the pronunciation of the company, EGAN Communications. But on a chart, this is what it looks like. It looks like a strong uptrend into a flagpole, and then a sideways to sideways lower consolidation, and then a breakout to the upside. To be a high type flag, it has to move at least 90% within 10 weeks, and then it has to be in a narrow consolidation. The entry point is either, breaking of this downtrend here in the flag portion of the pattern. So if you connect the highs from here at 1412 down along the highs through here, and then you see it close above that downtrend resistance, that's a good entry point, and also move above the highs. And we featured this stock as it was breaking the short-term downtrend in the flag portion of the pattern, and said to enter on a break of the prior day's high and the stock really took off after that. And that's what you often see out of a high tight flag pattern, especially the well-formed ones with enough volume, and they often make this big move shortly thereafter. But there's actually several high tight flags in this longer term uptrend that would satisfy the rules in the course. There's at least a couple of them in there anyways. I just want to show you an example of a high tight flag. Okay, in this case, the flag was, downward sloping. So if you look at this channel right here, if you connect the highs here and connect the lows through here, you'll see that flag, what looks like a flag. And then the top of the flagpole is right here, and the flagpole is formed by the uptrend moving into the top of the flag. Okay, so that's a high tight flag and requires that very strong move in a short period of time to form before you get into the flag portion of the pattern. Okay, and in this video course, I'm going to show you exactly how to play it. And with maximum effectiveness, we back tested several different popular exit strategies and found the best one to get in and get out of this trade. Okay, I'm going to show you the best strategy we found, not 20 years ago, not 5 years ago, but in today's market. So this really applies to the current market and should apply in the future as well. Okay, in the course, you will learn where to find the stocks on your own, the exact chart settings you need, and the precise entry-exit strategy we use to win big. All right, before I get into the strategy and more about it, I want to first start off with technical analysis and why it's so important. A lot of people think that technical analysis is kind of, playing with Ouija boards and sorcery, and they don't really understand what technical analysis is, and don't realize too that, technical analysis is really the study of the money flow into a stock, and it's also a study of human psychology. And human psychology tends to repeat itself, human behavior tends to repeat itself over and over throughout history, okay? But it's really about following the money, okay? And with the high tight flag, what we're seeing is we're seeing money flow into a stock, and usually from institutions and large private investors, because when the stock makes a big move, it actually holds those gains, okay? With lower price stocks under $10, and if it doesn't form a flag, okay, that narrow consolidation after the big move, it's very often just pump and dump. And usually it is. Usually a stock that makes that kind of move will turn over and fall hard, okay, because usually they're on stocks below $10. And especially in those stocks below $5, they tend to act erratically, and they'll tend not to hold the flag portion of the pattern. So they won't have that strong consolidation that we need to see after the big initial move higher, okay? The success rate drops on lower price stocks below $10 while the risk increases. So we want to, first of all, deal with higher quality stocks and make sure that stock is not just pump and dump. And having a long enough flag and having a narrow enough flag in the pattern helps us to weed out the likely losers and give us a higher chance of success. Okay, so when you get under $10, you tend to have a lot more slippage that you take on each trade. You have a lower chance of success. We found that in different strategies, that when you get under that $10 price range, you tend to get more losses. You have to take a wider stop loss, and you have pump and dump running rampant. So you want to try and avoid those. So a stock chart is like a resume to a hiring manager. Okay, it lets you know quickly if a stock is a winner. Okay, whether it's being accumulated over time, whether more and more large investors are buying the stock, the long-term performance of the management team, and the business model itself. Okay, so if we see that real strong move into a high tight flag, okay, we know that large investors are accumulating the stock and they're not just pumping it for a week and selling it on Friday. Okay, this is something real, and it points to a move that can be sustained because it made a really big move into the flag. So everyone's buying it hand over fist and not caring too much about waiting for a pullback. And when it does pull back, it doesn't pull back much. Okay, and that's the key thing to understand with this pattern, and why it's different than just a flag pattern and different than a stock that moves up 40% or 50% and goes into a flag, because those tend not to perform nearly as well in our back testing and in our own experience. So these are very exceptional stocks, and stocks in a very strong uptrend. And these are the ones, if they consolidate strongly, are the ones we want to watch for a breakout, because they tend to have a very high win rate and also tend to make a big move higher from the breakout point. If we learn how to spot these patterns and to read a chart in just seconds, we can tell the direction of trends on the different time frames and whether a stock is more likely to move higher or not. Okay, so again, it's looking at that long-term trend and looking at how it's consolidating and how it looks at the breakout point, that's key. And this course is going to show you how to do that. So again, with a well-formed high type flag pattern and the right volume characteristics as well, you know that the stock is more likely not to be a pump and dump. And in my experience over the years in backtesting, I know exactly what to look for to get that higher rate of success with a tight stop loss. And that's very, very important in trading. We want the very high percentage trades that win, at a very high rate with a tight stop loss, and also have that big upside potential. It's really critical to make big gains quickly in your account. And the high tight flag delivers these kind of trading setups for us. With most breakouts, it's pretty challenging, okay? Because most stocks that move up a lot, they consolidate and then break out, will turn over pretty soon after. They usually pull back to a key moving average, maybe find support there, and then may have another wave higher, perhaps. Okay, that's typical of breakouts in most markets. It's only the stocks that make an enormous move higher and have that really powerful consolidation for a long enough period of time and do so in a certain manner that have the much higher chance to make that big secondary move. All right, so there's different levels of breakouts. There's the really good breakouts where stock moves up, 20, 30, 40% over a few months and then breaks out. And then there's the real powerful breakouts where the stock moves up a lot over the past few months, consolidates in a very strong consolidation, and then breaks out. And that's a much better breakout to play. And smart momentum traders, they make a lot. And how they do that is they're able to qualify the trend leading into the pattern, okay, the stock itself, the strength of the consolidation, and the strength of the breakout, and play it with a tight stop loss. That's how momentum traders make a lot of money, okay, and the back testing that we have shows that. Okay, so if you apply the general principles that I've mentioned so far, you'll likely be discouraged. At some point have 2-3 losing trades in a row just by the law of averages, because you need to know all the rules. If you know all the rules in the course, you'll have a much higher win rate. You'll have these really big streaks where your account will go up a lot in a short period of time, and that higher success rate, the bigger gains will lead you to continue and make the big gains over time. So the key to success when trading breakouts is only trade the stocks in the strongest long-term trends after a well-formed consolidation with other key characteristics. Okay, I'm going to keep repeating that. All right, so a lot of people, get sucked into a trade once it starts going up. You just don't realize that it's all about trading just the best technical patterns on the best stocks, trading less and making more when you trade just the very best trading opportunities in the market. Okay, so the course breaks down exactly how to spot the best breakouts, and also, and this is critical, be ready with a very clear trading plan when they occur. We have a plan for the breakouts that get off to a strong start and those that get off to a slow start. So we have a different plan for each one, for each type of breakout that's optimized for both types. Okay, so now I want to go back over the back testing and kind of back up what I've talked to you about so far, not just based on my experience over the past 10 years and what I've noticed in the market over the past year especially, but also look at the actual back testing. And what I did was I took screening results. I saved screening results in Stocktwits.com, and I had monthly screening results over the prior 8 months. Okay, this was about from mid-December through July in 2018. What I did was I captured those screening results back then, saved those screening results, and you can do that easily in Stocktwits.com, and those that have and use that service in Stocktwits.com know what I'm talking about. But you can use it in any, most software packages that allow scanning. You can save the snapshot of the scanning results, or you can have it updated constantly, whichever you choose. And in Stocktwits.com, you can save that into a watch list, the results into a watch list. And I did that in the past, each time I ran the screen monthly. And I went back to those results, and then from that point forward, looked for any high type flag patterns that met, my criteria that's taught in the course. So I had satisfied that criteria in terms of the volume, in terms of the amount of the pullback in the flag portion of the pattern. It had to have enough of a consolidation. If it had a shorter consolidation, it had to meet other criteria that's taught in the course. And so it's very specific. I found all the high type flag patterns that met the criteria in the course going forward from the point the screen was taken. Okay. it not only includes the winners, the big winners over time, but also includes the losers too over time. Okay, there's a lot of back testing that's talked about online, and a lot of systems talk about using back testing on just the top winners over the past 5-10 years or over the past year. Okay, and so what they do is they find the best winners and they say, okay, now what was going on with those big winning moves early on in the move? Okay, and it might have been a couple handle breakout, it may have been a high tight flag breakout, it may have been a flat base or some other consolidation pattern that they found after an uptrend into that pattern. What they do is they just look at the biggest winners and find out what the characteristics were early on in the move. That's very helpful and that's very beneficial to do that. Okay, but unless you go back and screen for those patterns, save the screen results, and then from that point forward, see how all the stocks did, not just the big winners of the past year, but the ones that didn't work out so well, then it's not as honest. Okay, the results are not as honest and they're not as legitimate, I don't believe. And so what I did, I went back, I saved those screen results and I checked for all the high type flag patterns that developed from that point forward and see how they performed using the strategies taught in the course and also using typical exit strategies that are taught elsewhere online. That's forward testing versus just back testing. In fact, the other example I gave, again, this is forward testing, which yields much more realistic and honest results. Okay, now I did remove stocks that did not meet the volume and price criteria that I often use with other strategies. Okay, so the price had to be a certain level. In this case, it had to be $9 or greater at the point of the breakout. If a stock has 2 losing trades in a row, I generally, skip that stock and don't trade it in the future. So what I did was, if I had 2 losing trades in a row that I saw in the back testing, I took the losing trades, I counted those losing trades, and then I moved on to the next stock. So if there's 2 losing trades in a row on a pattern like this that should have a high win rate, then there's something going on with the stock itself. It might be the algorithms trading the stock. It might be the hedge funds and the mutual funds putting money to work in the stock. It might be manipulated or something. It might, who knows? It didn't work with that stock, but if there's 2 losing trades in a row, I counted those 2 losing trades in the results, and then I went on to the next trade or next stock and checked for any high type flags that developed in those stocks. Now, the initial backtesting results were very good, and I think the win rate was, around 65%. 65% with a tight stop loss. Okay, but then I added additional filters that improved the success rate to around 90%, with nearly twice as much upside as downside. Okay, and the filters are logical, and they're used by other experienced traders, and are very similar to the filters they use, but there are some key differences that I'm going to share with you in the course to achieve that higher rate of success in the backtesting. Okay, and again, I also tested popular exit strategies taught online on technical analysis sites all over social media and used by other experts. And these strategies included using key moving averages, placing a stop below a prior day's low, etc. Okay, and then I developed an optimized strategy to make 30% more profits in less time than one of the most often used strategies. So the optimized strategy performed much better than the other ones and yielded better results, and also lowered the time in the trade in many cases too, to less than 4 days, which is great. So the average now, including winners and losers, okay, was nearly 8% per trade, averaging both the winners and losers into that percentage rate. Okay, so 8% in less than 4 days. Okay, with around a 90% win rate, which is pretty fantastic. Okay, and this profit up per day beats even the best claims made by penny stock traders and social media without using any margin. And if you can average 2% per day, that's 60% a month with no margin. That's going to rival anything that's taught online. Okay, and the average max gain from the entry point was a whopping 40%, with an average time to reach the max gain of around 18 trading days. Okay, and again, this is why many technicians consider the high type flag the most bullish chart pattern. Okay, so now a lot of these, of course, didn't go up 40%. Some of them went up 100% or 200%. Other ones went up 8%. A lot of them moved up far less than that. Okay, so if you just say, oh, I'm just going to go for a 40% gain in 18 trading days. And well, the average, the average profit per day is a lot less than the optimized strategy that we use, and a lot of these stocks will not make it, anywhere near 40%. In fact, most of them don't. Okay, so it's the actually the big winners that skew that data, that average. All right, and I believe you're better off with the optimized exit strategy that we teach in the course. And per day, the average profits per day were far better. Okay, and the other thing too is that the win rate increases. So if you want to just sort of go for the home run every time, I don't believe that's a good idea because a lot of times it won't make it there, make it to your target. It'll hit a stop loss point, and some people feel like, oh, I'll just hold on to it until it makes it to my target. And if you're up down 15, 20% in a trade or 10% in a trade, then you lose 20%, then you got to make 25%, I believe, on your next trade just to get back to even. If you lose 30%, then you got to make over, I believe it's, over 40% on your next trade just to get back to even. Okay, so that can be discouraging, and that's going to give you a lot of fluctuation and a lot of volatility in your equity curve over time. Okay, so you're gonna have to ride bigger drawdowns, and that's tougher to do. And so with this optimized strategy for exiting, you can have a much more smoother equity curve and have a much higher win rate and take big profits. Now, of course, I'll show you how to ride those big winners and how to do it more effectively using a key distinction that I've never heard from any other momentum trader, and that's that'll be revealed in the rest of the course. Okay, now if a trading opportunity, a technical setup, as we call it, has a great win rate with great upside, that's fantastic. But if it happens once a year, if it comes up once a year, we're not going to have a big shot at making really huge gains in our account growth trading once a year. Okay, what if that once a year doesn't work out, or what if it makes 2%? That doesn't help us. Okay, now the good news though, with a high type flag during a bull market, we had 84 that formed the high type flag breakout or 5 type flag pattern and broke out using the entry points taught in the course. It reached those entry points 84 times. Okay, there's 84 high type flag breakouts, in other words, over the past 8 months, or during that 8-month period where I tested it. Filters that I used in my own trading brought that down to about 24, or about 3 per month on average. Now, the screens were run once per month, okay, and there's likely more high type flag patterns and breakouts beyond that. So my estimate is that there's probably 4 to 5 that come up on average per month that meet the filtered criteria taught in the course over the back-tested period, that are over $9. Okay, if you screen for them a few times a week, I would say at least 4 to 5 is my guess. And this is more than enough, even 3 is more than enough to make huge gains in your account over time, given the success rate and the average profit, which includes both winners and losing trades in the forward testing. I went back and also figured out that if you have a smaller account, let's say, and you're very aggressive and you risk 2% of your account per trade with 50% of your trading account, okay, around 2% risk per trade, and used half your trading account, okay, I calculated that you would have doubled your money within several months if you would have found all the high type flags that met my careful criteria, which I think is around 4 to 5 per month. It would likely have been substantially better than that. Okay, now some very aggressive traders out there, they talk about really huge numbers that they're able to achieve in a short period of time, and if you look at what they do, they take crazy margin in many cases. There's a lot of traders out there that post huge numbers by taking 5 to 1 margin, or 10 to 1 margin. Okay, but I looked at just 2 to 1 margin with compounding again. Okay, so these are compounded gains, which a lot of traders with smaller accounts that try to aggressively increase that account very, very quickly. Okay, they often use a margin and they want to compound, so they want to ride the gains into the next trade. All right, and that would have yielded about a 600% gain in your account in about 7 months. Okay, and all these results are very stunning. with or without using margin, and easily rivals the best traders, and also does that on less risky stocks. A lot of traders want to trade stocks under $10 or under $5 because the one out of 2,000 stocks that make, that doubles or triples within a short period of time. But overall, the odds of success go down a lot. In my own research, my own back testing of different strategies, they go down a lot when you get under $10 and even $20, really. The unfiltered high tight flag breakouts occurred much more often and would have averaged about 2% per trade. So if you don't use those additional filters I talk about and suggest using in the course, there's a lot more of those, and they average about 2% per trade, adding up the winners and losers, okay? And that's if you use really strict discipline on how you trade it. We found about 7 per month that did not meet the filtered criteria. Okay. Meanwhile, the filtered high type flags averaged nearly 4 times the profits at nearly 8% per trade, with around a 90% success rate. Okay. So really, you could have a great year trading by just focusing on this one most bullish chart pattern during a bull market, the high type flag. Okay, here's some of the advantages of trading this pattern too, and this is really important to understand as a swing trader. Okay, usually with this trading setup, you're in and out of the trade within 4 trading days. Okay, using the optimized approach, and the maximum in the back testing using that exit strategy was 9 days, and a lot of these move 20-30% or more within 2 weeks. Okay, it's surprising how the kind of moves you get out of this pattern throughout the year. Okay, so during a market or industry rally, this is really valuable because it gets you in and out quickly and into the next high type flag breakout. So maybe you have the leading stock in the industry breaking out of the high type flag. It makes a big move. You're out of the stock within a few days, and then the other stocks in the industry that are sort of lagging a little bit, but also forming very bullish chart patterns, they break out. Okay, so you're out of the first trade into the next trade, capturing that trade too very quickly, and into the next trade after that. So you can build your account quickly during a run in the industry or the market overall. Okay, I've noticed that in the back testing that I think it was June that I think it was 30 or 40% in the back testing, and then 15% the month prior. So you get a hot IPO market, let's say, or a hot biotech sub industry, or a really strong move in certain industries and sub industries for a few weeks, and you can just roll it into the next trade, and just keep playing this high tight flag and get a very high win rate with a tight stop loss, which is key, very important. Okay, sure, you can just jump in, all right, but if you don't have a good technical pattern, you're not going to know where to stop it. You could easily take a big loss. Where do you put your stop loss? Maybe your thesis is great. Maybe your target hasn't been reached yet. Maybe, it's still looking really good, but the price is going against you. So what do you do? Do you take a 20% loss, a 10% loss, 15% loss? With this high type flag breakout and technical strategy, you can have a high win rate with the very tight stop loss. I think that's how you want to play it. Some people can withstand the 20, 30, 40%, 50% drawdowns in their account. If they have a small account and are getting really aggressive, they can withstand that kind of drawdown, but most people can't. And most people get discouraged, and you do that too many times in a row, and you could blow up your account. So with this strategy, you're playing it with a very tight stop loss and a high win rate. Okay, and that's very critical in trading to have these strategies where you know the stop loss point, you stick to it, and you've got a higher win rate percentage if you trade these very best setups. Another advantage of this strategy too is that the biggest market winners have a strong tendency to break out this technical pattern or one similar to it. I talked about the short stroke pattern earlier on and how IBD has done the research to show that those that break out of that pattern early in a bull market especially will tend to make the biggest moves over the next several months to years. And so if you focus on this pattern, you're gonna be drawn to stories and learn more about the fundamentals of the company, and you're gonna find some of these companies where you do the research and you can justify a much higher price, and you may be in on something early enough where you can take part of your position, hit a really good entry point, technical entry point, where you can take a tight stop and let a portion of your position ride for months or years. And many of them pull back. Most of them will pull back after they hit the targets taught in the course. They'll come back to the entry point at least and below it many times, in many cases. But they often do rebound after a pullback and make new highs again if the business has great long-term potential. This will sort of get you in on, this price action will sort of point to a story that may be bigger than a swing trading opportunity. You can take a portion of your position if you swing trade and let it ride for a much longer period of time, and you can wait for a close below a key moving average that we talked about in the course. Also look for other good setups in the future. Okay, so in this strategy takes much less time than most day trading strategies taught online in chat rooms. A lot of these day trading strategies, they tell you that you gotta you run all your screens for hours every night. You've gotta spend an hour or two before the market opens, and then you gotta be there at the point of entry with this really complicated strategy. And if the stock's under $10, it can drop 10%, 15% in a minute, and it's a lot of time, a lot of effort, a lower win rate, and just makes trading a lot more difficult and time consuming. All right, now this strategy, the average profits dwarf the others. If you're pumping and dumping, if you have a big following on social media and you've got a low float stock under $10, and you can send a message out, and after you get in and then sell a minute later after one jumps in and push the stock price up, a good pumper out there, a really good pumper and dumper, you can do better, but everyone else can't because they don't have that kind of pull in a chat room, and you need a strategy really that works for you and not just for a pumper, someone who's pumping penny stocks. So, and you can use a strategy too while you work full time. All right. In fact, you can use the free Robinhood easily with this and the free Yahoo Finance candlestick charts. So you don't have to spend a ton of money on a very expensive platform and 6 months of training and do the other stuff they talk about in these chat rooms and the social media, and then find out that really doesn't work too well. It doesn't work too well, except for the people pumping the stocks. You really want to think about that and, make sure your strategy is going to work for you and not just the pumpers. Okay. So if you work full time, you can check the stocks each morning and place a buy stop order for any that could break out that day. And that's one thing you could do if you work full time. Or you could have your broker send a text alert, then go through the quick checklist that we have in the course and do that before firing off the trade from your smartphone. Takes just a couple minutes to do that, and you may be able to do that just fine while you work full time. And then you have your alerts for your targets. Generally these targets aren't reached right away. Usually they take hours or days. Okay, so you're not going to be like bothered by at work with constant alerts. All right, it's a few trades per month, and it has really great upside potential for your trading account. And again, it just takes minutes versus hours per day with other strategies. And those other strategies, you have to quit your job and lose that income, and then later you find out that people that aren't the pumpers don't make any money, or they make a lot less, and it's it can be very frustrating. So you don't have to go through all that. You can build your account part-time and do it much more safely. You can start in a simulator at first to prove it out and see for yourself. Okay, that's a very smart way to go about it. Once you know the precise targets, it's very, very simple and straightforward. And you don't have to study micro patterns on a day trading time frame and all the other crazy stuff that's taught online that where you generally unless you have a huge account on a more liquid stock or you're pumping and dumping, you won't make much anyway. So this is a great strategy for most traders with a small account that want to turn that into a big account, and it also will scale very well to a larger account. So you don't have to change your strategy once you get to a larger account. Okay, so here are the steps to success. We'll make this very straightforward in the course. First off, we're going to qualify the current market trend to ensure the market environment supports strong breakouts. Okay, then we're going to create a watch list of stocks with the right long-term and short-term trend and all the other factors that we talk about in the course. Okay, then we're going to check each evening for quality high type flag consolidations using the filtered criteria in the course so we can get a high win rate with a lot of upside potential, okay, and with a tight stop loss. It's very, very important. Okay, set your price alerts with your online broker, and then once alerted by your broker, enter a trade if it reaches the technical entry point taught in the course and meets the criteria at that point. And then you go through your checklist. That'll take just a few minutes after you get the alert. Okay, and then you wait for the stock to reach the price targets taught in the course, and at that point you sell. Okay, and then you wait for the next stock to reach the entry point. You rinse and repeat, basically, for a real shot at substantial account growth in the months ahead without risky penny stocks and without pumping up. Okay, so what's next? We're now going to learn each step of the strategy in detail, and it's very straightforward. Okay, we also include how to let the few big winners soar. Some of these skyrocket 50%, 100%, even 500% or more within a few weeks. Okay, you're much more likely to catch a huge move out of this pattern than a bottoming pattern. Okay, and that's confusing to some traders. Some traders think that you have to wait for the pullback, and on most stocks, that's true. Okay, the average stock, you probably are better off trading around a key moving average. Okay, on a top growth stock and a good stock, you should find support at those key moving averages and swing points, okay? And you want to wait for that pullback. But for stocks that form the high type flag that meet the criteria in the course, okay, you're not going to get much of a pullback, and you've got a much greater likelihood of a huge move from the breakout point, okay? So this is a very key distinction to understand. You play breakouts on the very best stocks in terms of price performance, okay, and fundamental performance, and a very strong consolidation and a breakout of that consolidation, okay? That's how you make money in momentum trading, if that's what you want to do, and that's very, very profitable if you do it right. Again, keep in mind you don't have to have an expensive trading platform for the strategy. In fact, you can use your smartphone and free brokers to use it effectively. And in a bull market, I believe this is the number one technical trading opportunity the market offers. Okay, and if you had to use just one strategy to build your account quickly during a market uptrend, this would be it. The best one I've seen by far. Definitely get ready for the next videos in the course. I'll see you in the next video.